What's going on, guys? Good evening, everybody. Welcome aboard to our weekly recap. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. Glad to be with you this evening and every weekend, obviously on Sundays, right around this time, around 7 to around 8 o'clock in evening Eastern Standard Time. So if you don't want to miss any of our future videos, make sure to turn on notifications, like these videos, and subscribe to our channel. Really appreciate it. This is my second video of the evening. The first one I did, guys, options members. I have consolidated premium and basic now. So there is only one option service, which is called the premium signals. And then you have masterclass. So it saves me from typing, from typing exits. All signals will have exits from now on. So just make life easy. Instead of having no exits, we'll just keep it with exits, keep consistency. Time is of the essence. So here we are. Uh, in regards to that video I just did, it's recapping the positions we have open, answering frequently asked questions, and kind of previewing the week. But this video is for everyone here on YouTube. Glad to be with you. Dow futures are up 59 points, excuse me. NASDAQ is up about 21. S&P up 0.14%. The Russell is up a quarter point. Off their highs this evening. We were a little higher, right? About 81 points on the Dow. The dollar is up slightly. That's probably why we're getting a little bit of a pullback here on futures. So again, we want that dollar below 105, guys. That's kind of the key. Crude oil is up 0.5%. Crossing my fingers that we hit support. Let's get to it. Crude oil first and foremost. Why do I say that? Because, well, ExxonMobil was a freebie. So tough. Let's look at it. Crude oil is bouncing off the 100-day moving average. I actually would not hate to go long here on crude oil. I think oil long here, target about 80. Again, this would be an overnight hold. So probably best is just stay away, but we'll keep an eye on it for the most part. You got that trend line bounce right here. You would keep the stop pretty tight, right around 77.85 or so. So that would be my call on it. I would see us getting to around 80 tomorrow if we get the dollar to pull back. Needs to get below 105, like I said. So that does translate to XOM. As you can see, the cup and handle is still intact. Thank God. Cup and your handle. So now it's do or die time for ExxonMobil as we have bounced up off the 50-day moving average with a nice bullish candle actually. So we need to get above 120 or so. And once we do, we get the trek down to 123. That would confirm the actual cup and handle formation. And if we were looking a little more, we would have the Fibonacci extension to where, okay, I'd have to do the Fibonacci's again. No worries. That would be all-time highs again. 130 is definitely a possibility if we redid the fibs, but that's what I would be looking for. Again, we broke out of the triple top, let's just call it, and now we're setting up for that cup and handle. So stay patient. This is why I bought time for June. ExxonMobil isn't Tesla. It's not going to move that quickly. So again, just be patient with me on that one, guys. We do have time. That's my pup barking. You must know that I'm doing a video. So I'm going to go ahead and bring up the weekly signals rather quickly. Freeport McMoran, the 51 calls for May 17, and then Apple. Yes, let's go over Apple together. I think that's the one everyone wants to talk about. Well done to the team. That was a tough hold, right? Wasn't easy, but we kept the faith, let's just say, in our technical analysis. Very similar to XLE. We knew what was coming. We got the breakout. Obviously, we got in a little early with this initial break. Fine. But we had to wait this whole time and got it. So well done. Again, we need to get above 187.04. So again, I do expect Apple to have a room higher. But guys, remember Tesla where it was up like 18% in a day or something wild? It's going to pull back. So Apple, again, I'm not saying we'll pull back to this gap fill as of yet. But again, if we get a little bit more of a pullback, maybe below 178.65, I have no problem shorting Apple down to 173 to fill that earnings gap. 100%. It would still be above the trend line, obviously. But a great trade. I'm very happy that everyone got it. We didn't catch it initially. I made sure everyone tried to wait. I wanted everyone else to get out before I did. At the end of the day, this is for you guys. And I love doing this job for y'all. Make sure everyone gets paid is a cause that really gets me out of bed. I love it. With that being said, a lot of members got like, let's see, what do these guys do? Let's see, let's bring up the Discord. The trophy room was on fire. I mean, Apple was an absolute banger. And this is why we do this. There's one thing, if you guys notice, I really don't talk a lot about myself. I try to make this more client centric. And this is what it's all about, the trophy room. You guys winning, I love it. That pretty much set the tone for the day. Um, it's great when earnings go your way, guys, trust me. But we don't do this often. So I don't want you guys getting used to just trading earnings all the time. Remember, that's only once a quarter. So it was a great trade. I'm very happy, but now we got to move on to the next, right? We got to keep moving forward. So with that being said, we do also have a watch list up this week. Let's go ahead and get to it. Why not? Robinhood above 1832. They do report this week. Let's see the date because I wrote it on the live market blog. They report Wednesday. So again, if you are on the Discord, you could see this here. The stocks I'm watching this week. Now, again, I don't know if they'll be signaled or not. It really depends on volume, guys. The weekly, nice candle, bullish candle. So at least that we're above major moving averages. You go to the daily now. Really, the prize here is the capture or the recapture of 20. So I pretty much expect the 20 calls on Robinhood to have a ton of volume ahead of earnings. That's where it comes to just really picking your horse here. So you're gonna know if you're wrong rather quickly. So again, unless we see something extravagant in terms of options that are really tipping the hand of what's possible, Apple didn't have tons of call volume when ahead of earnings either, and Tesla certainly didn't have call volume. Everyone thought that was going to die. So volume can tell you one thing or another, but we need to be very careful before we trade anything like this. I mean, Apple was something that we liked before we even had earnings. Robinhood here, I mean, yeah, 1832, the preference would be to catch it on the run up and get out of it before earnings, but we'll see. Again, I can't say I'm supremely confident in this one, but we'll see how it goes. In terms of what I expect, I think 20 is going to hit. Yes, I like the small caps going forward. I think rates are going to come down a little bit. I talked about that with the options members on their video. We can take a look at the 10-year here in a second. So again, I think that rates and the dollar are starting to get to that point where we get that pullback. Small caps. I do like China stocks. I put that on the watch list as well. So again, I think that's kind of gives us that tailwind for higher equity prices and higher commodity prices as well. The thing with Hood, I mean, it's kind of a crapshoot. I mean, is it user base? They haven't set up futures yet, so maybe something special comes out of Robinhood. But again, that seems very roulette-ish. So 1832 breaks. Yeah, I bet the 20 strike is going to be pretty crazy in terms of volume, but that's not really going to tell the tale. So, you know, I would say rather neutral there, but something to watch. Disney gives me a little more of a better trade, in my opinion. If we can break 115, get to 120. That is on Tuesday in the morning. Now, the good news is that we can wait for that earnings report and then see if we do get the push higher. And if we do, the 120s and the 125s are pretty much going to be in focus. The hope is that we don't push higher after earnings too sharply, but just enough where we can get an opportunity to get in. That's the problem. In my opinion, I think Disney goes higher. I think 120 comes, whether it's with earnings or not. But the point is here is that can we get above 115 ahead of Tuesday? That's going to be a tough one unless we get the real market push, the dollar pulls back and the yields pull back on Monday itself. Because again, they report Tuesday in the morning, not in the afternoon. We also have Shopify. Shopify is fighting that 50-day, very similar to the S&P. That's going to be next up on the talk here on the video. Again, nice breakout of a downward trend. Again, you don't need to draw the line to see that, kind of just breaking out of that. Get me above the 50-day. I like 80, 89 here, that gap fill. Absolutely. But we got to get out of this first. Now, we don't have to target 89 itself. We can do 85, we could do 82. So we got a little bit of options, no pun intended. Just keep an eye on the volume, basically. In terms of what my call is on Shopify, I think Shopify goes higher. I would say I have a little more high conviction on Shopify than I do Robinhood, let's just say. But both look great. In terms of Shopify, at least that's above their major moving average of the 50 week and the 100 week, but it is below the 200. So Robinhood, technically speaking, is more bullish. So yeah, I guess I digress. Yeah, Robinhood actually does look better on the watch here on the actual earning. Excuse me. charts. Hello. And based on the charts showing moving averages, I need some coffee. Excuse me. We are looking better on Hood than we are on Shopify. But I just think that Shopify, with that gap fill, it just seems that that's more likely to happen to me. So we will see what we get. S&P 500 futures. Apologize for the mumbling there. Blech. 5173, that's our target above the 50-day moving average. Once we get there, 5200 should confirm, and you're just going to break out higher and test the all-time highs. That would be pretty unlikely seasonally. More than likely that would happen in June, but it seems that as long as we can sustain above 51 and a quarter, 51.25, or right around 51.20, the S&P is going to move higher. And again, the backdrop to me would be lower rates, the 10-year treasury yield looking like it's going to pull back, the 2 years actually breaking down as well. And then you also have the dollar fighting that 105. That 105, guys, has to break down. And the good news is that as the dollar has gone higher, the S&P 500 has actually, in comparison to the dollar, has held up pretty well. It's not a one-for-one correlation where if the dollar falls a quarter point, the S&P is going to fall a quarter point. It doesn't work that way. There's obviously different variants, but the fact that the dollar here is at 105, we're higher in the stock market now than when we were at the dollar being 105 last time, is my point. It seems like the stock market is really absorbing a lot of things, whether it be bad news, news in terms or macroeconomic backdrops that may not be beneficial, let's say, like a hot CPI, for example, or a hot PPI. It seems like the market is just taking it in stride as we go along. So the one thing I can say is that at least earnings are holding up. And let's be honest, Apple's earnings were nothing special. They weren't. They just had a massive buyback. Awesome. And Warren Buffett sold some shares this weekend, or he said he did. I guess Apple's buying that back. At least that gives confidence in the future to shareholders. But on a technical basis, Apple has more to go. It's not because they had great earnings. Sorry to say. So let's take a look at NASDAQ. Okay, NASDAQ is getting near the 50-day as well. So that needs to break. We need 18.1. We'll put 1896. That's fine. And that's still not above that downward trend, but we're getting close to a nice little wedge here. So again, it's really red or black here. The S&P has a better chart than NASDAQ at this point, and that's all right. Really the point is the tail wags the dog here in terms of the NASDAQ too. But at least the S&P, with other sectors out there performing, is helping that. Let's take a look at small caps, and we'll finish it up here. Okay, at least the Russell, you got the bounce off that trend line here. Perfect. Bounce off support. Fighting the 50-day, 2100 isn't in the out of the realm of reality either. I think that's something that we need to keep our focus on because the Russell is more rate sensitive. So if rates do pull back somehow this week, maybe some kind of Fed announcement, I don't know. It just seems like the market is pricing some kind of Fed dovishness. I don't know what they're expecting, but that's what I see. So 2100, 2094 sounds about right for the Russell. That'd be something that I'm targeting. Maybe above 2070 be something that we can trade on the future side. So that'd be something in focus. Personally, more than the S&P. Even though the S&P looks great, but the Russell we can really do some damage, especially with lower rates. All right, guys, we'll go and leave it there. Have a great rest of your evening, and I will catch you guys tomorrow for the morning note. See you guys then. Have a great rest of your evening. Cheers.